This meeting is being recorded. EIRC Regional Council members, see Hariram ji as well. Sir, are you there?
Yes, sir.
Yes, sir.
All are here.
Okay, so welcome Hariram Sirji on behalf of EIRC and all the participants. And we are thankful to you for again accepting our invite to be the special addressee of the day. So we are here for the another technical session under the program Golden Charcha, under the speakership of Vinay Arya ji. He will guide us through the various income tax filing processes, their implications, the assessment, and all this, the basic picture of it. And for this, I will like to introduce first of all Hariram Agarwal ji, our regional council member of EIRC, to address the session and initiate this technical room. Over to you, sir.
Sir, am I audible?
Yes, sir.
Am I audible?
Yes, sir. Yes, sir. You are audible. Let us have a special address with Hariram Agarwal ji. Then we will move forward, sir.
Thank you.
Okay. Good evening, everybody, and more particularly, Amit Agarwal, coordinator, who will be working on these different aspects of ITR filing. Friends, ITR filing is a particular season. It depends a lot on the way we are getting our return filing mandates, and link forms all depends on the technical part of the Ministry of Finance. And normally we do see that it is getting delayed, and due to that delay in the system and all, the dates are being extended, and sometimes a lot of changes are being done in the forms and contents as well as return filing itself. So we have to get ourselves prepared before these form filing are being activated or being done, meaning thereby that the basis on which the written filing will be done, that is the preparation of PL account, balance sheet, audit report details, which may be required for the purpose of auditing, may be saved, completed and saved in its separate folders. And once the form are available, it should be directly taken from that particular folder. This can make a lot of saving of time and energy, and chances of errors are minimized if we start processing the return form in advance. And once the forms are received, we start filing the forms immediately and regularly and in lots. Friends, for this purpose, our Institute of Chartered Accountants have made kind of just released one publication, and that publication will be of immense help. That has been circulated by email by me also. That is, and it is available in the website of EIRC as well as the ICAI website also. The publication name is Checklist for Preparation of ITR Forms, that is ITR Form 1 and 4. So whosoever is filing ITR Form 1 and 4 can take the help of the checklist available in this uh, our site. And if the sharing is given to me, I can show you this also. Can you give me sharing? Sharing, right? Amit,
Sir. Yes, sir.
is it possible?
Yes, sir. Just give me a sec, sir. Sir, sharing right has been given to you, sir.
Okay.
So that will be appeared at the bottom. Yes, sir.
Yes. Checklist for preparation of ITR Form 1 and 4. This is the publication, and it has been recently released in the August itself. And August बोलने से it is released on 8th of August only. And this is what we can see is this available, and all the details, particulars are given in this particulars box, and it is covered under 150 pages. And if it is covered under 150 pages, so that your all queries related to filing of preparation and filing of form ITR 1 and 4 can be resolved to a great extent. I'll share the link for this publication in chat box itself also, so that all the participants can be benefited directly download with the
सीए का
help
एक
of
ये है,
that
सीए का एक मेरा ये था,
that
पीपीटी था,
link.
वो कहाँ है, यहाँ पे निकलेगा?
So I'm sharing the link also.
इनकम टैक्स
So you can share the link in the chat box so that every
Yeah,
participant has access.
yeah. I'm sharing the chat box.
पेन तो है घर पे, यहाँ पर आईटी इसमें था स्क्रीन। इसको थोड़ा मैच करेंगे तो हम आउट हो जाएंगे। यहाँ पर आईटीआर का है बुक के पीपीटी है, ये क्या है? नहीं नहीं, ये सीए का ये
Yes, sir.
So
Got
the
the
link,
link
yeah,
on the chat box. Sir,
link has been shared.
just can you just change it to the everyone has been shared to host and panelists, sir. So you need to change it to everyone, sir.
So okay. So now it will be shared to everyone also. Yes, it has been shared to everyone. So all the participants are getting a bonus point by getting this checklist. In addition to what our Vinay ji will be describing, that will be a permanent assets to all of you. Before the chat box closes or the deliberation closes, download and save the link and forward it to all your groups in which you are connected. And I hope this session will be very much helpful. And congratulations to Vinay ji for such a nice deliberation,
थैंक यू सर।
which we are going to take up. Quite energetic, our Vinay ji, Arya will be there and we will be deliberating on the topic. Thank you, sir. So may I take leave, sir, so that the session can be started.
Thank you so much, sir, for such a nice address and giving all the participant a bonus in the form of giving the checklist for the ITR, which has been issued by the ICAI in helping towards another effort helping towards the CA profession. And thank you so much, sir. And now we will go back to our speaker of the day. So it is my pleasure to introduce our speaker of the day, CA Vinay Arya ji. CA Vinay Arya brings a wealth knowledge to the topic for the day. And Vinay Arya is a chartered accountant by profession, and he is running his own firm in Calcutta itself. And CA Arya expertise extend to a broad spectrum of area including direct and indirect taxation, concurrent audit, internal audit, and the corporate audit as well. Importantly, for our session today, he has extensive experience in handling matters specifically related to income tax. With his comprehensive background, CA Vinay Aryaji is well positioned to guide us through the complexity of filing ITR return. So please join me in welcoming Speaker of the day, CA Vivek Arya, CA Vinay Aryaji. Over to you, sir. The floor is yours.
Am I clearly audible?
Yes, sir, you are clearly audible, sir.
Okay, okay. Thank you, Amit ji. Thank you, Hari Ram ji. And very good evening to all of the esteemed members present attending this webinar. So I am CA VK Arya. Right now I am in practice under sole proprietorship firm. Okay. So before I start my session, first of all, let me introduce what are the glitches, technical glitches or whatever it be, we are facing in filing income tax return. First of all, as usual in non-audit case, 31st July is the due date for filing of return. But this time, this year, this has been extended to 15th of September. And we have to wait for a long time, at least for 1 month, for getting these two ITR returns, ITR 1 and ITR 4. ITR 2 and 3 are also available, but ITR 4, sorry, ITR 5, 6, 7 are still not available on the portal, but they are available in Excel utility form. So this is our inconvenience, which I want to share with you. And every year we are facing this problem. So again, I'm thinking that since these three forms, 5, 6, 7 are still not on the portal, so the dates would be further extended. This is the one part. Another point which I want to discuss with you, that when you start your filing return, just check your Form 26AS and AIS. It is very important. And make a comparison between the old regime and new regime. You know that in old tax regime, we are getting some of the ATC to ATU, that is Chapter 6 deductions. It is still available, but in new tax regime, these deductions have been disallowed. Another thing regarding house property loan interest. Now, under the old regime, this house loan interest is available, but in the new regime, it is disallowed. So these are the major points. I will go through all these points later on, but I have just summarized it. Now, who are the persons? Who are the persons? Those who are required obligatory to file the return. Number one, Section 139(1)(a), that is a company and firm is required to submit return regardless of income or loss. What does it mean? Whether it is a domestic company or foreign company, every company and firm has to file the return. Number two, Section 139(1) read with fourth proviso. A resident person other than not ordinarily resident, not required to file under any other provisions of Section 139(1), who at the time during the previous year holds any interest, any asset, including financial interest as a beneficial owner or otherwise, or beneficiary in asset located outside India and acts as a signatory in any account located outside India. What does it mean? It means that a person other than not ordinarily resident is having any asset, including financial interest, as a beneficial owner and also a signatory in any account located outside India is required to file the return. Number three, Section 139(1)(b) read with 6 proviso. Individual HUF, AOP, BOI, AJP has income without claiming deduction under Section 10A, 10B, 10BA, ATC to ATU, that is Chapter 6, 54, 54B, 54D, 54EC, 54F, G, GA, 54GB exceed exemption limit. What does it mean? It means that if any person is having income beyond the exemption limit without deducting these sections, if anyone is having income beyond exemption limit, is required to file the income tax return. Now, Exemption limit for old regime is 2,50,000. And for senior person, that is more than 60 years, 3 lakhs. And super senior, 5 lakhs. And under new tax regime, it is 3 lakhs. And it is for all the categories of individuals. Exemption limit for assessment year 26-27 has been extended to rupees 4 lakhs. So now I come to point number 4, section 139(1)(b), read with 7 proviso. Any person other than company or firm who during the previous year has deposited in one or more current accounts rupees 1 crore in a bank or a cooperative bank. Number 2, incurred an expenditure exceeding rupees 2 lakh for foreign travel for himself or for any other person. Number 3, incurred expenditure rupees 1 lakh towards electricity consumption. Number 4, has total turnover exceeding rupees 60 lakhs in case of business and rupees 10 lakhs in case of profession. Number 5, is subject to TDS and TCS of rupees 25,000 or more, and in case of senior citizen, rupees 50,000. Number 6, has deposited in one or more saving accounts rupees 50 lakhs or more. So these persons coming under these categories, these conditions, they have to file the return. Then comes now number 5, section 139(4)(a). A person received income from the property held under trust used for charitable purpose without claiming exemption 11 or 12. What does it mean? It means that any charitable trust or religious trust claiming exemption under section 11 or 12 is required to file the return if its income goes beyond exemption limit. What is the exemption limit? That is 3 lakhs for old regime and 4 lakhs for new regime. And when we calculate the taxable income, we exclude these deductions under section 11 or 12. Then comes 139(4)(b). Any CEO of political party is required to file the return. There is no limit mentioned. So every political party, whether it is small or big, has to file the return of income. Then comes section 139(4)(c). If total income without claiming exemption under these sections, section 1021, 1022B, 1023A, 1023 AAA, 1023B, 1023EC, 1023ED, 1023 EE, 1023FB, 1024AB, oblique 1023C, 3AB, 3AC, 4, 5, 6A, 1029A, 1046 and 1047. What does it mean? It means whatever exemption is there, that has to be considered whether they have to file or not. If it exceeds the exemption limit, then they have to file. But before calculating the taxable income, we have to exclude all these exemptions mentioned under these sections. Now we come to point number 8, section 139(4)(d). Any university, college or other institution under section 35(1)(2)(3), irrespective of profit or loss, are mandatorily required to file the return. Section 139(4)(f), business trust, investment fund are required to file the return of income. So for old regime, the exemption limit is 3 lakhs, and for new regime, it is 4 lakhs. Now there is a notification issued by the Government of India, notification number 4207E dated 11/2/21, that gives relief to non-residents for filing return of income. If the said person does not earn any income in India other than income from investment in specified fund, refer to explanation C1 to section 10(4)(d). It means that if the income is specified there, under this section, other than income from investment in a specified fund, refer to C1. That means he is not required to file the return. If he does not earn any income, okay, other than income, that means under this section, income is exempt for non-resident. If the said person has transacted capital asset, refer to section 47(7)(ab) listed in stock exchange located in IFSC, and the consideration of such capital on its transfer is paid on payable in foreign currency. What does it mean? If any non-resident transfer capital asset in IFSC located in India, and that transaction has been done in foreign currency, then he is also not required to file the return of income. Now we talk to return form. First, I come to ITR 1, Sahaj. This is called Sahaj. As the name suggests, it is the simplest form of return. Simplest form. Anyone, even a student or BCom pass fellow, can fill up this form easily with little knowledge about the commerce or accountancy. Okay, they can file, no problem. But you will realize later on that although it is a simple form, Sahaj, but there are so many conditions which have to be fulfilled to get this privilege of filing this Sahaj file. You see, for a resident, an ordinary resident having salary income, family pension means husband or wife has expired and any one of the spouse is getting the pension. That is called family pension. Okay. So having salary income, family pension, income from one house property. Remember, we are exempt to house property income, but here he is talking about one house property, not being brought forward loss or carried forward loss. Income from other sources, not being income from lottery or horse winning, including family pension, income from one house property, but not carried forward loss, brought forward loss, and who has not claimed under section 57. But it is allowed standard deduction for family pension only under section 57. So these are the conditions. First, that they should be ordinary resident, resident and ordinary resident, and the nature of income is family pension, income from one house property, income from other sources, but not being income from lottery or horse winning. Okay, and income from and that person is not claiming any deduction under section 57 except standard deduction for family pension. Now you just go through the conditions. That is a long list and it is very difficult to fulfill all these conditions to get the privilege of filling ITR 1. Now, first of all, now who are the persons not allowed to file ITR 1? Number one, has assets including financial interest in any entity outside India, has any signatory in any account located outside India, income from any source outside India, has income to be apportioned as per section 5A of IT Act. What is 5A? Apportionment of section 5A. There is a community that is called Portuguese community, and they have been given a special privilege for calculation of income. So these persons are also not allowed to file ITR 1. Is a director of company holding shares of unlisted company, is accessible for the income of any person whose income has been deducted tax at source, has claimed a relief of tax under section 90, 90A, 91, has agricultural income exceeding rupees 5,000, and his total income exceeding rupees 50 lakh. Mind it, this is very important. Anyone who is having income more than rupees 50 lakh is not allowed to file ITR 1. Has income taxable under section 115 BBTA and has income referred to section under section 115 BBE. So these are the tax section, I think, tax liability section, 115 BBDA and 115 BBE. So these persons are not allowed to file ITR 1. So I'm telling that ITR 1, although is very simple, it's very simple, but there are so many conditions to be fulfilled to get this ITR 1 available. ITR 2, for an individual HUF not having income from business or profession. Very clear. No business, no profession income. And this is only for individual and HUF. ITR 3, for an individual HUF having income from business or profession. So please, as far my experiences gaining, okay, throughout my career, I feel that ITR 3 is a lengthy. ITR 3 is a lengthy form, and usually we prefer to fill ITR 4 because it gives us many reliefs like verification of income, assets and liability. So these things are free from ITR 4. So we generally encourage ITR 4. And for presumptive income, ITR 4 is suitable. So what I'm talking for an individual HUF having income from business or profession. Okay. So suppose I'm just giving you a practical problem. If a person, an SSC, is having business income, capital gain, and this house property income, and also the salary income, then which ITR is suitable? You see all the 4 kinds of income there, and which ITR is suitable? To my experience, ITR 3 is the most suitable. And this is the only form which will allow you to fill up the form. Now we talk to ITR 4. For an individual or resident or ordinarily resident HUF or a resident firm not being LLP, deriving business income, and such income is being calculated under section 44AD, 44ADA, or 44AE. These all are presumptive income sections. So those who are availing this section, 44AD, 44ADA, 44AE, they are allowed to fill ITR 4 because they did not fill up the long assets, liabilities, income, just you have to mention 4 accounts, that is sundry debtors, sundry creditors, cash in hand, and inventory. So these figures you need only for filling up the particulars. And for mentioning the income, there is a percentage prescribed, 8% and 4%. 8% for cash transactions and 4% other than cash transactions. Sorry, 8% and 6%. Okay, so the calculation is very simple, and nobody, no income tax authority is going to catch you, or you will go for any scrutiny, I think. So this is my personal experience. But firm is allowed, but not LLP is allowed, deriving business income. Now we come to ITR 4. You know, ITR 4 is also not applicable for those persons which I have already discussed you, has assets including financial interest outside India, rupees 50 lakhs. So these conditions are also applicable to ITR 4. And also, ITR 4 is not available for persons who are claiming brought forward or carried forward loss. For them, there is a separate ITR 3 they have to fill up. Now we come to ITR 5. For firm AOP BOI, but not being company or to whom ITR 7 is applicable. Very clearly. If ITR 7 is applicable, then ITR 5 will not be applicable. So if you are claiming trust income, submitting the return ITR 7, that will not be allowed under ITR 5. So it is especially for firm AOP and BOI. ITR 6 for companies not being companies claiming under section 11. So those companies which are claiming exemption, which are claiming deduction under section 11 are not allowed to file ITR 6. ITR 7 for persons including companies required to furnish under section 139(4)(a), 139(4)(b), 139(4)(c), and 139(4)(d). So it also comes under trust, charitable trust, political party. So these come under ITR 7. And for a successor entities consequent to reorganization under section 170A, these kind of assessees will file ITR A, Roman big capital A, ITR A for successor companies. Now, if the adjudicating authority passes the merger, amalgamation, or reorganization of company, and the SSC has already filed ITR, then the successor entity will be allowed to file the return after reorganization. And this is allowed under section 170A. Now, ITR U for persons who want to update income under section 139(80) within 24 months from the relevant assessment year. What does it mean? It means that if anyone wants to file the return of previous assessment year, suppose 24 assessment year 24-25, assessment year 23-24, then they can file. And what is the time limit? 24 months from the relevant assessment year. It means if the relevant assessment year is 23-24, then you can file within 24 months. That means 24, 25, 25, 26. Within 2 years, you will be filing ITRU. Now, under the new rules which have been passed in the last budget, this 24 months time has been extended to 36 months. From 24 months to 36 months. And this file has to be done under section 139(80). So there are so many conditions under section 139(80), which I am going to discuss later on. Then only you will be entitled to file ITRU. Now ITR Roman 5, what does it mean? Where data of ITR 1, 2, 3, 4, 5 and ITRU are electronically transmitted without use of DSC. It means it is offline receipt. Basically, technically, it is called offline acknowledgement of ITR without using of DSC. Now we talk to mode of submission of income tax return. There are different modes prescribed in the Income Tax Act, which are applicable to different persons. First, I take up individual. If he is required to audit report under section 44AB, then DSC is a must. And there is another option that is called EDC. So transmitting return electronically under EDC. That is another facility without using DSC. And if a person is more than 80 years old, he or she cannot use the computer's electronic system, then for them, paper mode is still allowed. Paper mode. And they can also use the other modes, DSC or EDC. And in any other case, DSC under EDC verified by submitting ITR 5. So there are three modes for any other case: DSC, under EDC, or verified by submitting ITR Roman 5. What is verified by submitting ITR Roman 5? What does it mean? It means that we are sending the acknowledgement physically to the department after filing the return. We are not using any electronic mode. So due to various technological reasons, various difficulties, we can avail this ITR Roman 5. Now for company, DSC is compulsory. Whether it is a loss profit company, whether it is domestic foreign company, DSC is allowed. There is only one option, DSC. For ITR 7, political party, you know, under ITR 7, there are various kinds of SSEs, and political party is one of them. For political party, DSC is required. There is no other mode. And any other mentioned above, if any other case. What does it mean? It means that for any one of the option is available. That is DSC, EBC, ITR Roman 5, any other. ITR 5, LLP firm, person not mentioned above. If it is ITR 5 case, section 44 AB is applicable, DSC will be applicable. But for any other case, any mode is available, TSC, EVC, or ITR Roman 5. Now you see that before filing the return of income, we also have to submit the reports. Submit the reports under different sections. So those reports are not required to be enclosed with the returns, but they have to be submitted separately and prior to submitting the return. So what are those sections? Under section 1023C, 4, 5, 6, 6A, 12AA, 12A, 1B, 44AB, that is tax audit, we know. Audit under Companies Act, relevant form. So these are the sections under which we are required to file the reports in addition to income tax return. So what are the relevant section? Sorry, what are the relevant forms for 10B, 10BB, 3CA, 3CB, 3CD? 3CB, 3CD is very common in our fraternity. Okay, so we need not mention it, tax audit. 3CA, you know, for those persons who have already done audit under different laws other than income tax law, is required to file 3CA. And 10B, 10B is for more than 5 crores revenue in case of trust, and 10BB in case of less than 5 crores revenue in case of trust. So 10B, 10BB, 3CA, 3CB, 3CD, these are the relevant forms. Now I can talk to time for filing return of income, because these are the basic knowledge about filing of return of income. Now there is a long list of sections under which we require to file audit report. I'm not going to mention each and every one because it will be a long list. Okay. So now we move to timing for filing return. What does it mean? Means the due date for filing the return of income under different situations for different assessees, where the assessee is required to furnish under section 92E pertaining to international or specified domestic transactions, and also the partners of such assessee, and if covered by section 5A, spouse of such partner. What does it mean? It means that those persons who are required to furnish report under section 92E mentioning international or specified domestic transactions, and also the partners of these assessees, and also the spouse covered under section 5A, that is Portuguese family, okay, which I have already discussed you. For them, the due date is November 30. Due date is November 30. Where the assessee is a company not covered under the provisions specified above, the due date is October 31. So for each and every company, the due date is October 31. Then where the assessee is a non-company, where the accounts of the assessee are required to be audited under any law, October 31. So tax audit will also come under this category, because we need to submit the tax audit report before September 30th. Okay, so this October 31 is relevant. If the assessee is a partner in a firm whose accounts are audited, the partner of such firm, including the spouse of such partner, if a provisions of section 5A applies to such spouse, October 31. What does it mean? Any firm which is required to go for audit, and the partner of such firm and the spouse mentioned under sections highway is required to file before the due date, October 31. And in any other case, July 31. That means for individual case, the due date is July 30. Now, from time to time, we see every year that the government is inclined to extend this due date due to several reasons. And this also happens in this year. So return of loss, section 139, any person who has sustained a loss is also required to file the return by the due dates mentioned there. Now, there is one question, very practical question, which I also want to put before my esteemed audience. As per the new tax regime, the exemption limit has been increased to rupees 12 lakhs. Sorry, there is a exemption limit has been increased to rupees 4 lakhs, and there is no tax on up to rupees 12 lakhs. I ask many persons, I go to many seminars that you are getting exemption 12 lakhs free, no tax. Are you required to file the return? Most of them are telling, yes, we are not required to file the income tax return because we need not pay tax. We are having 12 lakhs rupees income, below 12 lakhs. So we need not file the return. This is the common practice which is being followed by common people. So I make them understand, look, 4 lakhs is your exemption income. And 12 lakhs, up to 12 lakhs, you did not pay tax, right? But the point is that the time you start earning beyond 4 lakhs, although it is below 12 lakhs, then you have to file. You are legally bound to file the return. So this is a big mistake. Many of people think that 12 lakhs is okay, exempt income, no file. But this is a common mistake. So now 139.4, section 139.4, belated return. If the assessee has not filed the return within the time mentioned under section 139.1 or time allowed under section 142.1 as per the notice issued, belated return. Okay, and what is the time limit? 31st December of relevant assessment year. 31st December of relevant assessment year. I remember 2 or 3 years back, this date was 31st March of the relevant assessment year. People generally forget it, that this is 31st March. Still they are remembering, but I am telling them, no, it has now been reduced 31st December. So don't do any mistake. You file before 31st December. Otherwise, you will be penalized. Otherwise, there will be no option available to you. You have to go to higher authority. You have to avail the facility under section 112(1)(b), I think, for getting exemption from commissioner. So it is very hard task. It is not possible to get it easy. So I just warn them that no, don't do this mistake. Try to return the file within due date. Now, what are the consequences of belated return? You have to pay penal interest under section 234A, filing late fee that is under section 234F, and you will also be not allowed to entitle, you will not be allowed for carry forward of few losses. And there are several sections which are not allowed if you file belated return. That is section 10A, 10B, ATAI A, ATAI IAB, ATI AC, ATI B, ATI BA, ATI C, ATI D. There is a long list up to ATRRB. That is, so it's a long list under chapter 6A, I think. So revised return under section 139.5. From the assessment year 2017-18, if any person having filed return under section 139.1 or 139.4, 139.1 is the regular within due date filing, and 139.4 is the belated file, finds any omission or wrong statement in the return, he can revise the return within the time allowed under this section as mentioned below. Anytime before 31st December of relevant assessment year or before the assessment is made, whichever is earlier. So please take one point, very, very important, that for belated return and also for revised return, the due date is 31st December. Earlier, the system was different. I remember that it was up to 31st March. You can file the revised return belated up to 31st December, so far as I know. But now the system has changed. The due date has been changed. So please remember that for the revision of return and for submitting the belated return, the due date is same, 31st December. In any case, you cannot go beyond 31st December. Now we talk to 139.1A, updated return under section 139.8A. Just a minute. Now, so far as I know, this section 139.8A, updated return, has come to existence before 2 years, so far as I remember. So earlier we used to file returns of previous 4 years, 5 years, 6 years. There was no limit. But now the government has put restrictions on submitting the return number of times. Okay, so anyhow, the government later on realizes that there are so many genuine cases under which they are not in a convenient position to file the return. So that's why this section has come into existence. So any person, including the person who is accessible for any other person, may file updated return within 2 years from the relevant assessment year. Okay. Suppose this assessment year 25-26 is going on. Okay, 25-26 is going on. So updated return within 2 years of the relevant assessment year. Suppose there is a relevant assessment year 22-23. Okay, relevant assessment year. So we have to file the updated return from 23-24 to 24-25. Okay, so this year, this way you have to find out the number of years. Now this 2 years has been extended to 4 years in the new tax regime. Okay, thank you. So who can submit the belated return? any person who has submitted the return under section 139, 1, 4 or 5. Okay. And any person who has already submitted the loss return within due date, he can also submit the updated return, which is income return. Okay. Now, there is one more condition. If as a result of updated return, the quantum of carried forward loss or unabsorbed depreciation or MAT or AMT credit has reduced for any subsequent year, the updated return has to be submitted for every subsequent year. It means if due to filing of updated return, carried forward loss, unabsorbed depreciation, or MAT or AMT credit has reduced, okay, then in that case, for every subsequent year, you have to file updated return. Now, there are so many conditions mentioned in the Act which prevent us from filing updated return. First of all, loss return is not to be filed. If the filing effect of filing updated return is reducing the tax liability determined on the basis, yes. Say, for example, tax liability was 100 rupees on the basis of filed return earlier. Now it has come to 80 rupees after filing this updated return. On filing updated return, it is coming 80 rupees. It will not be allowed. So reducing tax liability is not allowed. Or if the refund amount is increasable, what does it mean? Whatever you are going to file, it increases the refund. That is also not allowed. A person cannot file under the following cases. A search has been initiated under section 132. Survey has been conducted 133A. A notice has been given for money, bullion, jewelry of any other person but belonging to this SSC. Any notice has been issued to the effect that the document banks of account is lying with any other person but belonging to this SSC. No updated return shall be furnished by any person for the relevant assessment year. What does it mean? I have already submitted updated return for this assessment year. Now I am not allowed to again submit the updated return for the same assessment year. And an updated return has been furnished under section 139(80) for the relevant assessment year. Or any proceeding assessment, reassessment, recomputation, revision of income is pending or has been completed for the relevant assessment year. So these are the conditions under which we are not allowed to file the updated return. Now, there is one more condition. Then when you file the updated return, you have to first deposit the tax. And what does it include? Tax, additional tax, interest, late filing fee, interest for delay in advance payment, tax payment. So this has to be considered. And certain reliefs are also allowed, like TDS, tax relief under section 89, 90A, 90, 91, AMT, MAT credit. These are allowed. Okay. So now I talk to a very relevant topic regarding 115 BCA. I've already told you that you please keep in your mind when you file the return of income, first check your tax under the two tax regimes, new tax regime, old tax regime. First compare it. Then you check AIS 26 AS. You should check it, and you should also check the filing of return, particularly in the TDS form. There may be mistakes regarding the nature of income. Okay, so you have to be very careful. And you also have to be very careful which return you are going to file. Otherwise, your refund will be blocked. You will be face many problems for recovery of this refund. Now, I talk to 115 BAC6. What is it? Now, for salary person, there is no limit. Every year, they can make a choice whether they will go for new tax regime or old tax regime. But for business persons or profession, they have to choose. If they choose 115 BAC6, that is from new tax regime to old tax regime. Once they have chosen it, then only one time they will be allowed to withdraw from this 115 BAC6. 115 BAC6 allows from new tax regime, that is called default tax regime, to old tax regime. Now you come from old tax regime to new tax regime, but you will be allowed only one time for old tax regime to new tax regime. In future years, you will not be allowed. So be very careful while you are filing the business return file. You must be availing these regimes very carefully. Otherwise, you will be miss the exemption and you will have to pay more tax. Now, regarding so many deductions and exemptions which are not allowed under the new tax regime, like LTC, HRA, special allowance. So these are not allowed. Like ATC to ATU deduction are not allowed. Home loan interest is not allowed. Okay. So even professional tax is not allowed, And but one thing, standard deduction is allowed. Under both the tax regimes, standard deduction is allowed up to rupees 75,000. Okay. And for old, it is 50,000. So what are the exemptions which are still allowed under tax regimes? That is gratuity, commutation of pension, leave encashment, retrenchment, VRS, non-monetary perk by employer, some received under LIC, then interest and withdrawal from PPF, RPF, and payment and withdrawal from NPS, payment from approved superannuation fund, exemption of PO interest up to rupees 7,000, standard deduction, family pension, tax rebate under section 87A, and relief under section 86, 89, 89A, 90, 90A, 91. So these are the sections, these are the exemptions and deductions which are still allowed under new tax regime. But there is a long list of deduction and exemption which are not allowed in new tax regime. For new tax regime, the income on which tax is not payable is rupees 7 lakhs. And for old tax regime, this amount is 5 lakhs. Now, regarding the ITR 7, filing of trust return income, okay, there is one major change. Hello? अच्छा मेरा हो जाएगा 2 मिनट और लगे ओके So I just want to conclude this session before discussing this ITR 7. Now, earlier, what happened? Uh, I will tell you in very simple words. Earlier, what is happened? We make a provision in PNL account for any expenditure and get allowance uh, under ITR 7. We get exemption or deduction allowed. But from last 2 years, there has been a major change. Those expenses which have been provided for but actually not paid is not allowed. Is not allowed. Okay, this will be allowed in the year in which it is paid, irrespective of the year in which it is incurred. So please be very mindful that this exemption is not going to give you relief on the basis of accrual method of accounting, but on cash method of accounting. So now we talk about the 87A, section 87A, rebate under section 87A. So in the new tax regime, 12 lakhs, there is no tax, and 60,000 rebate is allowed under section 87A. And in the old system, this is 7 lakhs. This is 7 lakhs and 40,000, that is about section 87A. Now, finally, when I talk about the filing of return, there is one section that is called obligation to furnish EIR. What is EIR? Annual Information Report pertaining to financial transactions, section 285BA. EIR. It means there are so many institutions, including individuals, they have to maintain the details, records of the transactions. Like payment made in cash for purchase of DD check, whatever it is. For banking sector, it is a must to keep the record, cooperative bank. And there is one more, receipt of cash payment exceeding rupees 2 lakh for goods or services other than those specified above. Any person who is liable for audit under section 44AB. That means whatever you cash receive exceeding rupees 2 lakhs, you have to report if you are audited under section 44AB. My purpose is that when you will open the AIS, there are so many information regarding your transactions which they collect from this statement. So now for cash deposit in current account, more than 50 lakhs, bank has to keep the reports. And cash deposit of 10 lakhs or aggregating 10 lakhs or more, aggregating if any other current account or TDR, that is account that has to be reported. Then TDR aggregating rupees 10 lakh or more other than renewal of in any financial year, bank has to keep the record. So these are the list. So I'm not going through each and every item. It's a very long list. Anyway, I wish you all of you best of your luck, and in finishing your filing of the return job, and whatever hindrance you face, whatever difficulty you experience, you can convey to us. We are ready to solve your problems as early as possible. Thank you, everyone present here. Thank you, Amit ji. Thank you, Hariram ji.
Thank you so much, sir, for such a interactive and insightful session for the day. And that was a fantastic presentation explanation on the topic. And we really appreciate for sharing your knowledge and expertise with us. And I'm sure all the participants must have been, enumerated with how to file, what are the things to be taken care, what need to be put in where. So all these query and small things has been taken care in the entire presentation. And to move around, to our next segment, that is the question answer round. We have few questions for you, sir. Rajesh Kumar
Yes.
Shrivastava is asking whether a salaried SSE whose tax is deducted from source on salary only does it need to file ITR 1 for the interest income from saving account in which his salary hits. Interest on saving account is very negligible, say only rupees 3000, but he comes in 30% bracket.
Yes, sir. I've already discussed about the limit. If the income is below 50 lakhs, we can go for ITR 1 because he is earning salary. Okay. And very few amount about saving bank interest. So he can go for ITR 1. If there is no capital gain, then he can go for ITR 1. No problem.
Okay, sir.
It
And
is
the,
the simplest form.
which is the simplest form out of all.
Simplest form. Yeah, yeah.
And sir, another question from Manmohan Dhanuka ji. Sir, can a charitable trust file ITR 1?
No, sir. No. For charitable trust, ITR 7 is applicable. So far as I know, ITR 7.
And the last one, sir, Bhavesh Mishra ji is asking, sir, if tax liability is reduced due to genuine reasons, can the updated return be filed? That is a very common question being asked by
Yes, I know. But
sir.
I have clearly mentioned, I very clearly mentioned that if there is effect of tax liability decreasing, okay, effect of decreasing the tax liability, then they will not allow the updated return.
Correct.
So
So
every
basically,
time
Government of
they
India makes the
lose
rules
money.
on the benefits side. They want to collect
Yeah,
the
yeah.
tax,
I'm
but
also facing this problem. Every time the clients are coming and they are asking me, sir, you just filed 4, 5 years back. My refund is there. Thank you.
yes, sir. Sorry, I guess the it got there were some connection issues. Yeah. So next question is from Manmohan Dhanuka ji again. Sir, in the portal, only ITR 1 is available, ITR 7 or ITR 5 is not visible at all.
I'm telling you that ITR 1, ITR 2, ITR 3, and ITR 4 are available. ITR 5, 6, 7 are still not available on the portal.
So, sir,
ITR
to
5, 6, 7 are available in, sorry, 5 and 6 are available only in utility form, not online mode. So
sir,
you have to wait for another 7 days, I think.
so, sir, considering this, the follow-up question: how how much chance is there for the ITR filing extension for ITR
Yeah,
5?
yeah, sure, sure. Yeah, I'm also hoping that this will be extended.
Okay, and,
Extended. It may
sir,
go beyond March, I think. Up to March. It
up
may
to
go
March.
up to
That's
March. Yeah,
that will
yeah,
be very. Hopefully, we do.
yeah.
And so another question from Brajesh Kumar Srivastava ji, can't he avoid negligible interest income? That is the follow-up question for the salary ITR
Yes,
1.5.
yes, yes. Yeah, you have told. Yeah.
So he's
So
asking,
negligible
can't he
interest.
avoid
Only
negligible interest income?
there is only negligible interest. He can go ITR 1, I think.
ITR 1 में सर उन्होंने पूछा था कि अगर मेरा सैलरी इनकम है और सिर्फ 3,000 रुपए का इंटरेस्ट इनकम है तो मुझे कौन सा आईटीआर फाइल करना है
अच्छा
तो उसका
केवल इंटरेस्ट इनकम और कुछ नहीं है नथिंग
नहीं sir, nothing.
ITR, he can go for ITR 2 also. ऐसा है सर, मैं बता रहा हूँ, in each and every form there is income from other sources. In every form you will find it. So this comes under income from other sources. So you can avail either one or two, no problem.
Okay. So another question from Ganesh Sharma ji. Sir, is it mandatory to file the ITR if we have received the Form 16 from our employer and there is only salary income?
I've already told the criteria. If you cross the criteria, exemption limit, what is the exemption limit? 3 lakhs for new regime and 2,50,000 for old regime. If you cross this limit, you have to file whether you have got 16 form 16 or not. It is not matter. It doesn't matter. You have to file if you cross the exemption limit.
So, any more question from the any of the participant? So I think that's it. It was a very nicely curated session, and it
Sir,
was.
next time I will ask you, I will request you to give me more time because my PPT is still there. I have not shown it.
Sir, I totally
PPT.
understand, sir, but we have formulated the session as such कि we are just have a 1 hour session, and that we are conducting every alternative day, every week. That is Monday, Wednesday, and
Okay.
Friday.
This is my first experience.
Yes, sir. Thank you, sir. And sir,
Thank you.
there is another question from Manmohan Dhanuka ji. Sir, why the portal is showing me ITR 1 even though it is not applicable to a trust?
I could not follow your question.
So the question is why the portal is showing me ITR 1 even though it is not applicable to a trust. So I guess कि ITR तो सारे सबको ही दिखेंगे. Everyone will
हाँ,
get to see
हाँ,
all
दिखेंगे.
ITRs whether they are applicable to them or not. They can download it, they can keep
Yeah,
it,
yeah, yeah.
but they have to decide which ITR is applicable to them, and
Right, right,
accordingly they need to file the same.
right.
Right, sir?
Yes.
That is the thing, I guess.
Yeah.
Yes, sir. So thank you so much, sir, for such a wonderful session and sharing your knowledge and expertise with us and guiding us through the whole ITR process and filing of it and all the assessment process as well. So thank you once again, sir. On behalf of EIRC, I am the host for the program, Amit Agarwal. Thank you again, sir, and thank you to all the participants for such a wonderful interactive session and putting up in all our session starting from Monday to Friday, every alternative day from 5 to 6.
Yes.
So we will meet you all again on the very Wednesday from 5 to 6 with another speaker, with another topic. So till then, take care and have a good day. Thank you so much, sir.
Thank you. Thank you.